October 2025. Gold is on fire, smashing through $4,200 an ounce for the first time in history. Over the past year, the yellow metal has soared more than 60%, capturing the world's attention. But amid the frenzy, one player stands out: China. The People's Bank of China, the PBOC, has quietly been adding gold month after month. Today, their reserves exceed 2,300 tons, valued at over $240 billion. That's roughly 7% of China's total foreign reserves. Why is Beijing stocking up now? Is this a smart move to safeguard its economy, a hedge against the US dollar, or a risky gamble at record highs? In this episode of The Marketman, we break down China's gold strategy, examine the risks and rewards, and explore what this means for global markets. Let's dig in. Why gold matters to central banks. To understand China's gold buildup, we must first understand why central banks hold gold at all. Gold is no ordinary commodity. It is a strategic, crisis-proof asset. No counterparty risk. Unlike government bonds, gold does not rely on anyone's promise. Treasury bonds depend on the U.S. paying back. Gold depends only on itself. Global liquidity. Gold can be sold anywhere in the world at any time. In times of crisis, central banks can convert gold to dollars or other currencies in minutes. Dollar hedge. Gold often moves opposite the U.S. dollar. When the dollar weakens or global trust in dollar assets wavers, gold typically rises. Inflation and crisis protection. During wars, sanctions, or financial turbulence, gold preserves value when cash, bonds, or digital assets might falter. The lesson is simple. Central banks treat gold like insurance, a way to protect their reserves against political, economic, and financial shocks. Since 2010, central banks have been net buyers of gold every year, a trend amplified by geopolitical events such as Russia's sanctions in 2014 and the freezing of $300 billion of its reserves in 2022. For China, these lessons have not gone unnoticed. China's gold accumulation. Between late 2022 and 2025, China has steadily increased its gold reserves. The PBOC bought nearly every month, paused in mid-2024 when prices spiked, and then resumed aggressively. By mid-2025, the bank had marked 9 consecutive months of purchases, even as gold reached unprecedented prices. China's strategy is clear: be patient, buy smart, and accumulate over time. The mid-2024 pause signals a disciplined approach. Not panic buying, but tactical patience. Then, as prices stabilized, Beijing resumed its purchases, showing confidence in gold's long-term value. Today, China holds over 2,300 tons, a substantial portion of its foreign reserves. A few years ago, gold made up barely 2% of the total. Now it's a strategic cornerstone. Globally, gold has also reclaimed its place as the second-largest reserve asset after the US dollar, surpassing the euro. Why China is stockpiling gold? China's motivations are strategic and multifaceted. 1. Geopolitical insurance. Gold is virtually sanction-proof. With tensions rising with the US, Beijing is mindful of the Russia precedent. Dollars and euros can be frozen. Gold cannot. 2. Diversifying from the dollar. China has reduced U.S. Treasury holdings from $1.3 trillion to roughly $750 billion over the past decade. Gold provides a hedge against the dominance and volatility of the dollar. 3. Low opportunity cost. Gold yields no interest, but in an era of low real rates and high uncertainty, the trade-off is acceptable. Bonds may yield a few percent, but gold offers stability, liquidity, and crisis protection. 4. Cultural and domestic support. Gold is deeply valued in China. Local demand for jewelry, bars, and coins surged in 2023 to 2025, even at premiums above $100 per ounce in Shanghai. Political and social support for holding gold is strong, making PBOC accumulation domestically popular. 5. Long-term vision. Analysts suggest Beijing is preparing for a multipolar currency system, reducing dollar reliance. Large gold reserves could underpin confidence in the yuan, possibly supporting a digital currency with gold backing in the future. In short, China's gold buying is a calculated strategic move, a mix of domestic policy, global foresight, and financial insurance. Risks of China's gold strategy. Even smart strategies carry risk. China's gold accumulation is no exception. 1. Price risk. Gold is at record highs. If prices drop 20%, China could face paper losses of $50 billion or more. Central banks aren't daily mark-to-market, but such swings impact reserve value and public perception. 2. Opportunity cost. Gold earns no yield. If global bond markets improve or inflation stabilizes, China may miss out on income from higher-yielding assets. 3. Herd mentality. Central bank buying has pushed prices higher, creating a feedback loop. If other buyers step back, prices could fall, leaving China exposed. 4. Premiums and market footprint. China's massive purchases can inflate local premiums. The Shanghai market has seen gold trading $40 to $120 above global prices during high-demand periods. Selling large amounts could depress the market. 5. Scenario risk. Suppose the world stabilizes. Inflation is low, economic growth steady, and geopolitical tensions ease. Safe haven demand may decline, and gold could stagnate or fall. China's large, high-cost holdings could underperform relative to other assets. In short, the strategy is not without peril, even if it is strategically sound in theory. China's gold accumulation in 2025 is a story of foresight, strategy, and risk. Beijing is buying insurance against geopolitical, economic, and financial uncertainty. But timing, market volatility, and opportunity costs could challenge this approach. For the market man, one thing is clear. Gold is back at the center of the global financial stage, and China is leading the charge. Whether this bet proves brilliant or costly depends on how the world unfolds in the coming years. If you enjoyed this deep dive, subscribe to The Market Man, like this video, and comment your thoughts. Is China making a masterstroke, or are they buying at the peak? Let's talk. Until next time, keep watching the markets. Because in a world this unpredictable, knowledge is your greatest asset.